up, YouTube fam? Brandon Weaver here once again, and we're getting right into your questions and answers. I've got a litany, many questions and answers for you, so let's get right into it. First thing, piggybacking. A lot of people are talking about AU's trade lines. Yes, we're doing trade lines, authorized usership, so reach in touch with me. Get premium, phenomenal trade lines. It is possible. You want to hit the certain specific criteria, of course. If you are very low, we want to repair your credit, get you up just a little bit. Now, the trade line AU piggybacking is going to be for a period of time, so you can get your credit square, so you can get your home loan, you can get your car loan, you can get your business trade lines, your own primary trade lines. Now, this is something that I really like to let you know, is that you can get your own primary trade lines, unsecured cards, once you've got that solid credit score. So repairing your credit a little bit, getting those trade lines, put it on there, boom, piggyback, get that authorized usership, move it on up, and now you can get your own primary trade lines, and then you will be okay on your own, and your credit score will go up, and you make those on-time payment. Okay, that on-time payment history, right? Okay, so AU trade line. Got a question about AU trade lines. A gentleman had his father put him on as an AU on his good credit, okay? So you have the son, got put on the father's credit, okay? He was concerned, the son was concerned that the son's bad credit would affect his father's credit. It does not work that way. They're not merging credit files. The only thing that's happening is your dad is putting you on that Chase credit card, so that Chase credit card will boop, pop up on your credit report, make sure it posts, make sure you're good to go. You know, it's my dad, come on, he's letting me use the card, come on, put me on the, they want to see that they're, on it, right? That they're, boom, it's got family, this is gonna be easy, this is a slam dunk. Your credit, the son's credit, your credit, sir, was not gonna go over to your father's, it's not gonna merge, okay? The only thing that's gonna happen is that your dad's little Chase card here is gonna move over to yours, and you're gonna be good to go, as long as he keeps that utilization down, all right? We know here on this channel, I like under 10%. Many people out there say under 30%. Believe me, I've seen 0, 1%, 2%, paying it off on time. That's where you're gonna really kill it, right? That's where you're really gonna boost it up. Don't try not to be going over no 10%. Now, if you can, you have to, you make sure that 30% is the max. Now, listen, this is very careful, very important. This is very important. So listen up or take notes on this. What I've seen, and what I've seen personally with other people, is that they may think that they're paying it off in time, and they're charging it up, and they're going above 30%, they're charging it up, and they're paying it off, and they think they're paying it off before, and they're getting it under 30% before the close date, before they report, and sometimes they don't. Sometimes they report differently. Sometimes they play games. Sometimes they don't know the report date changes. Oh, this month was 31 days. The last month was 30 days, 29, 28, February, whatever. You know what I mean? So I've seen it. I've personally seen it. I'm like, why is my balance higher than what I paid that? No, it's because he paid a day or two later. Something was just a little off. So don't even give them the opportunity. Make sure you don't even charge over 10% or charge over 20% or charge over 30%, whatever you're keeping. I say under 10%, right? Keep it down, don't even charge it up, and make sure you pay right away. If you're paying like it's like cash, pay it off right away. Don't carry a balance so you don't get those interest charges, and so you can get that cash back, get those miles in your account, or get that good on-time payment history if you're building up your credit, all right? So far, if this video is helping you out, give it a thumbs up, all right? I really appreciate you guys out there. We hit 54,000 subscribers because of you and your amazingness, your phenomenalness, your excellence, your awesomeness, where we can do the work for you at awesomelifegroup.com, Awesome Life Group. Because of you guys, it helps me keep doing what I'm doing. We're helping one another. I've seen great questions and answers. People are helping each other on the channel. So thank you so much. This is fantastic. And let me get back into it. All right. We got one collection validation letter for all 3 bureaus. Is that enough? Okay. So the question is, the individual is sending out their 609 dispute letters to 3 credit bureaus. And the concern is they want to do the 2-pronged approach, right? They want to send the collection validation letters directly to the collectors. By sending one letter to one collector, let's say you've got AFNI or LVNI or Midland or whomever it is, right? And you're sending the letter out to them. Is that enough to cover you for the 3 bureaus that you've sent 3 different letters to the bureaus? Boom. But only 1 letter to the 1 collector they had 1 collection with. Right? So you sent all your letters, all your collection letters to all the collectors, but you're worried about this 1 collector Is that enough? Do I need to send one to them saying, hey, I disputed with Equifax, and then send another one saying, hey, I disputed with TransUnion, hey, I disputed with Experian? Do I need to send 3? No, you are covered. 1 is good enough. The reason is because you're sending your letters approximately the same time. You might have them a little staggered, going to the bureaus, Equifax, TransUnion, Experian. You might, but pretty much within a few days apart. Boom, boom, boom. They're being delivered, right? They're getting them about the same time. They're getting picked up in those PO boxes around the same time, a couple few days difference, all right? Which is fine, which works out well, okay? So this will still cover you because they still have to do their own internal investigation. So it's about the same time. If you sent 3 letters in, they're gonna get there all around the same time, right? You're gonna send 3 letters in, or if you try to stagger them, they're all still gonna wind up around the same time. And even so, they're just gonna look at this and be like, you just disputed we just got a letter from you 1 day ago or 2 days ago. So they're gonna just throw those out anyway. 1 to the collectors, then 1 to the bureaus. 1 to Experian, 1 to Equifax, 1 to TransUnion. You will be fine, you'll be covered, it's okay. Now, you can get those collection validation letters, you can get these 609 dispute letters, you can get the videos to walk you through the process, you can get the inquiry letters, you can get everything to dispute this stuff for you at 609creditrepair.com. We've got the packages. The Beyond Committed package has been phenomenal. People are getting great results with it, so you can do it on your own. We've got the email support, we got the comments and questions here, or we can do it for you at theawesomelifegroup.com. All right, now let me take a quick glimpse at my notes and up back to you. Okay, so question: what is the criteria, good criteria, what is the criteria for buying a home? All right, everybody wants to get into their dream home, everybody wants to get a house, people are tired of paying all this crazy nonsense, this crazy high rent's going up. So I've done some research beyond just the credit side of it, okay? Of course you need a minimum 640 to get a house. I really like to see people at 720 or above if you can get to 760. So those AU trade lines are gonna be big, on-time payment history is gonna be big, having your own credit is gonna be massive, okay? Fantastic, phenomenal. Not having too many hard inquiries in the past 2 years, in the past 24 months. They would actually prefer if you didn't have any, okay? But here are some of the things that I really want to impart upon you in purchasing a home in this market. It's very high. The market is very high right now. It is a seller's market, so to speak. Sellers are making hand over fist and selling their homes, okay? So what's happening is many people are not even intrigued by the idea of potentially having to move in their home. Okay, so they're selling, and then if they move somewhere, their mortgage might be higher. So it's very challenging, all right? If you're in a big city, it's very challenging because everyone's trying to get those starter homes and get those homes all at once, right? So you want to be the absolute best buyer you can be. You want to be able to put that 20% down if you need to, okay? Some of you don't have to. Some of you have different FHA loans or NACA or the VA loans, okay? If you're doing more traditional stuff, you got to put something down or something. You want to make sure you have that available, okay? And make sure that it isn't going to tie up too many of your resources. That's what I would say. You don't want to put more than 10% in any one asset class. A home is a little bit different, especially if it's going to be your home for, let's say, 30 years. That brings up another point. 30 years to mortgage yourself or this criteria. What we see and what I've noticed is about 7 to 15 years makes a bit more sense on the math side of it. And I know that sounds weird. It's from what I've researched, and I could go into a more in-depth process of this and all that in a later video. But just hitting some of the criteria, I would say having a really good credit score, 720 and above. From what I've seen, you can go into like a MyFICO. That's what I've seen and used, MyFICO. And they will actually tell you and give you an estimate of what you can get with their FICO score. And what's interesting is they have a special FICO for mortgage, just like they have a special FICO for auto. So you actually want to go in there and see what the mortgage lenders are kind of looking at. And when I say kind of looking at, is sometimes the banks and different lending agencies will have their own little variations to what they want to lend to you and what they'll give to you in rates and terms because of your debt to income ratio, okay? So if you have no debt, that would be phenomenal. That would be a very marketable criteria, okay? Very marketable. How much you're earning, very important as well. How much you owe, of course, and your credit utilization, right? You don't have anything, you're not owing anything. So what I would say, above 700 score, right? Above 700 score, really no debt, nothing outstanding, nothing really revolving, credit utilization is low, you have good credit, okay? Obviously you have good amount of credit, but you're not really using much of it. You can pay the bills, right? You can pay the monthly payment, you can put your 20% down, and you're really financing it no more than about 15 years. That's what I would say, okay, 15 years-ish. I think people who are financing themselves out longer, 20, 30 years, it might be pushing it. It's up to you though, okay? This is up to you. This is just an opinion of a madman here, right? I'm just kidding, guys. I really hope I'm giving you some value and helping you out, and make sure that if you're going to purchase something, make sure it's right for you at the right time, all right? I know a lot of individuals want it, need it, gotta have it, but there's always alternatives. There's always a way. Where there is a will, there's a way, all right? Where there is a will, there is a way. So, if this video has helped you out, give me a thumbs up, or really like, subscribe, share, comment. Hit the little bell for notifications for the next time I go live. I'm gonna try to go live more often, guys. I really appreciate you. If you're having difficulties with your credit, you wanna get it straight, hit me up, all right? 609creditrepair.com, or we can do it for you at theawesomelifegroup.com. Until I see you in person, y'all, I'll see you on the other side. Take care.